Stocks in China were subdued after data showed China's consumer prices grew for a fifth month in June, but missed expectations while producer price deflation persisted as government support measures set a bumpy recovery in motion for the world's largest, or rather second largest economy. Meanwhile, locally, the rand gained in early trade. That was against the US dollar as focus remains on the future of interest rate hikes, as well as what's going to happen, especially as we look forward to those US key inflation data prints that could give more hints on the Fed's future interest rate path. The rand often takes its cues from global drivers like US monetary policy in the absence of major local data points. Looking at the local markets picture nonetheless, the all-share index down 0.3%, financials down 0.4%, and the industrials also in negative territory, down 0.1%. Resources down 0.5%. And when we look at what is happening when it comes to the currency picture, the rand is at 18.08 to the dollar, 19.56 to the euro, and 23 rand 16 to the pound. To give us more perspective on the markets, we are joined by Fahima Adia, who is an equity analyst at Momentum Security. Fahima, thank you so much for your time. Given the fact that everyone's been sort of studying the comments that came out of Jay Powell's congressional testimony and also anticipating the September rate hike, how are you dissecting local and global market sentiment right now?
Afternoon, Nastasia. Thanks for having me. Yes, so I think the markets have been a bit mixed after we saw those comments made by Chair Fed Powell. And if we look at the US, I think markets there reacted a bit better than what we're seeing locally on the JSE. So he did say that the US is making considerable progress towards reducing inflation, and that keeping interest rates high for too long will be, damaging for the economy, and it could put economic growth at risk. But I wouldn't say there was a clear signal that we got from him to say that they will definitively be cutting rates, as the market is really hoping that it will be in September. But we are definitely seeing some more positive data come out from the US. The recent non-farm payroll data that we saw did provide signals that the US economy is indeed cooling. Unemployment rates are going up. But it does seem that the Fed will wait for further data before they make that difficult decision to cut rates. They, of course, don't want to cut rates too soon because inflation will then just go up again. But we are waiting for some key inflation data to come out of the US tomorrow and on Friday. So the market will be looking to that for more signals.
Speaking of more signals, given the picture that you've just described, are you also leaning with the market that's expecting a rate cut in September? How are you viewing things when it comes to your own rate cut calls?
So, I think that September is actually right around the corner. And given the tone from the Chair Fed, Jeremy Powell, it just doesn't seem like that is going to happen as soon as we are hoping for, that the market is hoping for. It's probably will likely only come through, in my view, towards November, December, once they have more data to kind of observe and dissect, and that really gives them that clear signal that inflation is coming down sustainably. So for now, I think September might be a bit soon.
We've already kicked off the second half of this year. When you look back at the first half, is there a particular stock or sector that surprised you the most?
So I think it would definitely be that massive bull run that we saw on the tech sector in the US. It doesn't seem to be slowing down at all. We've seen the NASDAQ reach record levels. Stocks like NVIDIA, that's part of the Magnificent Seven, is up almost more than 200% in the past year, which is just very significant. And we're seeing the similar case with other stocks in the Magnificent Seven, huge gains there. And I think this is, definitely something that's taken the market by surprise, the sustainability of this bull run in the tech sector. It will be interesting to see what's to come from that in the next few months.
Speaking of sustainability, let's bring things locally for a bit. When we had that GNU cabinet announcement, we saw that rally in local stocks, and in fact that broadened out into the small and mid caps. From your viewpoint, has the steam run out of that rally, or is it too early to tell, given that a lot of the ministers are sort of, getting a sense of their own departments, and we're seeing how this thing plays out?
Yeah, so I think, it seems like a lot of that positive sentiment is sort of priced into the bigger cap stocks for now. But if we look at the small and mid cap, I think there probably is still some upside. So generally, your small cap stocks are seen as the riskier ones in comparison to your bigger caps. And I think what the market, though, is now waiting for is to basically just see what changes are going to come from the GNU, and is this going to have a positive impact on the country and our economic growth, employment, and what's to actually come from that. We do need to see some concrete results.
As I mentioned, we've kicked off the second half rather. What questions are you asking yourself as you look at equity markets and we wait, I guess, for the politics in the US to sort of kick in as well?
Yeah, so I think it would basically be to just see if this bull run is sustainable in the second half of the year. Will we see a pullback in markets? So a lot of economists are projecting that there will be a bit of a slowdown after, given that there's been such high rates in the US for so long. But the data is still showing that the US economy's growth has been decent, and there could actually be more of a softer landing than what we had thought initially. But yeah, we'll definitely be just looking for further signs that when the Fed is expected to cut rates, because that will definitely have an impact on what we see in the months to come.
Before I let you go, just quickly, we spoke about when the Fed might cut this year. When it comes to the SARB, what's your conviction on that?
So I think, the SARB generally follows the US in terms of its rates cuts. But the governor of the SARB has so far said that, while we are seeing inflation come down, it hasn't exactly reached that target that we're looking for. So again, I think similar to what the Fed is doing, our Reserve Bank will just look for further data to support that inflation is coming down sustainably. And we'll also look for cues from the Fed's timing on cutting rates there in the US.
Fahima, thank you so much for your time. That is Fahima Adia, who is an equity analyst at Momentum Securities.